My name is Richard Kersley. I'm the Global Head of the Research Product at Credit Suisse, and we're delighted to be publishing the 4th edition of what is the Credit Suisse Research Institute's Emerging Consumer Survey. To conduct the research, we've again partnered with the leading global firm in consumer research, Nielsen, who've conducted face-to-face interviews with nearly 16,000 consumers across 9 emerging economies. And this year we've extended the reach of the survey this year to add Mexico to the existing list of countries that we'd previously covered, the so-called BRIC economies, Indonesia, South Africa, Saudi Arabia and Turkey. Alongside the detailed country-by-country analysis in the report, there are a series of key themes we'd highlight. The first is the survey does reflect a more sober tone, and in that respect is in keeping with the less supportive cyclical macro factors that markets themselves are reflecting on. Political and social tension is also playing a role in some of the countries. If we look at the barometer we've looked at in previous years of the net percentage of consumers who expect their financial conditions to improve, it has come down to 26% from 28% last year. In fact, when specifically asking consumers whether now is a good time to make a major financial commitment, the readings have slipped more markedly. However, the relativities between countries is important as the overall message, and there are considerable differences indeed within the survey. So to make both a rounded assessment of the drivers of consumer sentiment and also the relative positioning of countries, we've introduced the Emerging Consumer Scorecard. It examines near-term sentiment, the consumer's perception of his or her financial position, and also income prospects and the perception of risks from inflation. The scorecard actually finds China ticking most of the boxes and ranking number 1 in the table. In contrast, South Africa and Turkey sit towards the bottom of our rankings. And with regards to South Africa, what concerns us most is that these readings also conceal a serious contrast between the views of rich and poor. The views of the poor have only continued to deteriorate in this survey. The second theme we reflect on is the makeup of the emerging consumer, with an eye specifically to income. Determining who is the income earner and where he or she resides is key to judging consumer preferences and the growth potential in specific markets. With the benefit of the granular data we have on income in the survey, coupled with our analysis carried out in the Global Wealth Report from Credit Suisse, we build up an income profile of the consumer. An initial aggregate observation we can make here relates to the so-called emerging middle class. Consumers are on the move. 4 years ago, we estimated just over a quarter of BRIC households sat in the $1,000 to $2,000 bracket. This is now closer to a third, or indeed another 60 million households have been added. How and where this middle class is developing is though key. We find a major difference in characteristics between India and China, for example. Low-income consumers still dominate the spending base relative to China's far broader spread, and that extends its middle-class representation. There's also a contrast in Latin America, where the middle class is far more obvious in Brazil than it is within Mexico. As much as these country differences, there's 2 other demographic themes that shouldn't be overlooked: age and location. Indeed, we highlighted last year how much of this emerging middle class were typified by young consumers and the superior incomes they exhibited. But a new emerging theme for 2014 is the recovering rural consumer. Consumer expectations for wage increases in 2 of the largest and most populous economies of India and China are now significantly higher in rural communities than their urban counterparts. In fact, across the survey as a whole, we see this pattern for more than half of the countries that we're actually surveying. I mean, put simply, the new rural middle class is a theme to watch. Third and finally, the theme that we'd want to highlight to people is what relates to how consumers are spending money and what they're spending them upon. Our structural view of the emerging consumer, of course, has been and essentially remains a significant positive one, but based around structural potential for consumption with increased income and increased wealth accumulation over time. How has the nearer term cyclical factors impacted this story? And the answer to that question is it has had an impact, and an adverse one at that. Where this negative effect is most apparent has been in the bigger ticket discretionary categories, where the outlook for cars and consumer durables has deteriorated. Indeed, if economic uncertainty persists, it's these categories where I think the greater degree of risks would continue to lie. However, bright spots remain in smaller ticket and perhaps branded discretionary areas such as sportswear, watches, jewellery, fashion, and these are perhaps tied to that younger consumer referred to earlier. The study also analyses which categories show untapped potential for the long term given low penetration rates, and of course bearing in mind the bullish structural theme of consumption we have going forward. A shortcut to consider investment opportunities as we draw out in the report is how to focus on areas where penetration rates are low and spending momentum remains robust. A broad range of opportunities in this regard emerge in Asia, with strong stories in spirits and holidays as a market in China, cars and internet penetration in India, and for dairy and cars and technology in Indonesia as well. But themes that run across the emerging world include the outlook for meat and protein consumption, smartphones and sportswear, and also financial services, which remain pretty underpenetrated, particularly in areas such as insurance. I hope those key themes summarise the content within the report, but for more detail, please do go to the Credit Suisse Research Institute website, where the report can be downloaded, along with the data book, which provides a lot of the supporting data behind those conclusions. Thank you.